what your kind of main lessons are learned? What's any last thoughts about what we should learn, what we should do differently, and whether you're optimistic about things?
Well, I'll kick off because it's been attributed to somebody that that there's a point of being optimistic because there's little point in being anything else, and so that is something I very much subscribe to, because I think that the extraordinary thing that I think that we've seen is the resilience that we've had in the face of the pandemic. We knew it was coming, but I think I certainly underestimated its impact, both from a perspective of investments as well as in terms of the personal impact that it's had on me and on people that I work with and that I care about. So I think we have to acknowledge that very clearly. But at the same time, I think the resilience has been extraordinary. I think the fact that the global healthcare, and in particular research-based pharmaceutical industry, has been able to come together and to create these vaccines in absolutely record time, regardless of the issues, the quibbles, now the delivery. The point is the vaccines work, they will get rolled out, and they will be the key to overcoming this disease as we've overcome many others and many more devastating ones. So I think that fact is something that to me is one of the most important lessons that I've seen, and I think is also what makes me optimistic about the future, because I think this innovation and the resourcefulness and the fact that people want to carry on doing what they're doing and they want to prosper, I think is going to carry on. And if we look forward for the next 12 to 18 months, my expectation is that we will have good old days. I think that we will see a very substantial economic recovery. I think we will see the pent-up savings that some people have being spent, and I think we will see the consumption coming back. And I hope that will set off the types of virtuous cycles that will be emotional, that will be financial, that will be economic, and that we can then use those to work on some of the things that we've talked about, in particular the inequality, the setback that has been a 12 to 18 month setback, not more, but not less, and the capacity in terms of actual investment and in terms of human capital that we need to be able to be prepared for the next pandemic.
Maybe I actually agree. I'm a relatively optimistic person, but for the interests of interesting discussion, let me bring the dismal science view to this. I think if there's one thing that we should be very impressed by, along with, say, the reaction of pharma, the reaction of the NHS, the flexibility of the NHS, the dedication of sort of people on the front line, I think one thing as a macroeconomist that's really striking is how quickly governments were able, again, not perfectly, but usually more positives than negatives, to bring in policies to try and keep the economy going, to keep industries on life support, which essentially have done almost no business since a year ago. So I think that's a real positive. The pessimism that I have, and it's a big risk that I think relates to what I was saying earlier about this sort of eagerness to undo all of this, to sort of wind back and to feel incredibly constrained by the fact that extra money had been spent in the last year to keep the economy going, to not invest in the right things, to not try to use policy to address all the inequalities that we've mentioned, intergenerational, income level, industrial. There are all sorts that really need to be addressed. And it will take a government with a really kind of big vision to set out a plan for the next 10 years and to really try and implement policies that do that. And again, they won't get everything right, but if they have a good plan, I think they could. My pessimism would be that there's going to be this scramble to get back to lower debt levels, and in doing that, sort of pull the rug from under a kind of still weak economy with low productivity growth. And, yes, we may be back to normal in a kind of interacting sense, but we will be anyway a long way from back to normal in terms of getting on a better path and building for a better, more prosperous future, which is really what the objective should be. But let's hope I'm completely wrong, as I often am.
So it is true that I think all three of us would agree that achieving faster growth is the right way for us to try to reduce the importance of debt and the drag that debt has on the economy. I think that's absolutely clear. I think where I would disagree with a little bit of what you were saying is it's not clear that this is actually going to be the panacea for the inequality which is built up. And the reason I say that is that we've had the last 30 years of on and off growth, which hasn't actually solved the inequality issues which are in the economy. And those issues have become laid even more stark by the last year. So I think my kind of only tempering pessimism on this is if we don't take seriously the sort of inequality which has been really exposed in the last year, and we just rely on thinking we can grow our way out of the problems we're in, there's a real danger we're going to grow our way out of the problems we're in for a certain section of the population. And there'll be a lot of the population who'll be left behind. So that's my kind of pessimistic note on this. But on the other hand, I'm very optimistic for a lot of the reasons which you just said about our opportunities to really grow the economy going forward.
So if I could just, I don't know if it was me who, I want to be clear, the big strategy that I was pushing for is one that both gets growth, but also addresses some of these challenges. And let me be really clear, like the really big challenge, like, if I was a fiscal policymaker right now, the really big challenge is not necessarily the COVID one. Most countries, because interest rates are so low, face very favorable dynamics that even if they just get deficits back to normal levels like 3% or 2%, the debt ratio will start to come down because interest costs are so low. The real challenge, therefore, is the one in 2040, 2050, when the aging population really kicks in. The cost of the public pension and the health costs of that will become astronomical relative to what we have now. We haven't even mentioned it, but the big challenge of climate change. How do we build back greener? That old expression. I think these are. It can't just be we want growth. When I say the right kind of growth, what I mean is the growth that addresses these things. And I think, Hamish, maybe to be even clearer, you're right. Growth is not the only thing that does it. If we had less growth, but it was more evenly spread, that would probably be long-term better and more sustainable for the economy. But that still takes a grand vision, and we have to have trust in our institutions that they will deliver that. And maybe that's where my pessimism is.
I will jump in though on this, just to add to that I think there is a very strong link though between growth and sustainability. And I think that one of the things that we've seen is that as we're moving to an economy where it is much more about intellectual capital than it is about physical capital, where for businesses, it's much more about the operating expenditure in software and research and development than it is about the capex into physical plant and equipment, and where it's about cash flows and not so much about returns on some kind of an asset, whether that's a physical or a intangible asset. I think that the key to that is sustainability. And so I think, again, at being of risk of seeing opportunity over risk, clearly climate change and the other aspects of the changes that we're seeing are tremendous risks, but I think there are also tremendous opportunities. And companies or firms are moving, I think, very strongly, in part because of their own alignment, in part because of pressure from consumers, whether that's commercial or whether that's through politics in the form of votes, in that direction. And so I think there is a great link. And so it really does, I think, tie together that as we come out of this, part of it is the investment to avoid the next pandemic, but part of it is the investment that's an opportunity to avoid some of these sustainability issues, and in particular around renewable and technology and other things. I think that is a tremendous opportunity. In that sense, I really do think it's not so different from other periods in history where we've always faced tremendous challenges, where there's been disruption in technologies, and where it's turned out that, whether it's, steam engines or cars or whatever the disruptive innovation was, will lead to positive outcomes, to employment, to positive growth, as you both rightly highlight, that will put people into a better place than they've been before. So one of the questions that I've always thought about as somebody who is keenly interested in economics and who applies them in terms of investments and stewarding assets for institutions, charities, and other types of long-term investors is this question of inequality. And the thing that I have been thinking about for a while is the question of, is it real or is it perceived inequality that people are so worried about? Because on the one hand, yes, and we talked about it as part of our conversation earlier, much of the inequality that we're worried about comes from asset price inflation, which benefits those people that have capital, whether that's stocks, any kind of savings, whether it's stocks, whether they own companies, whether they're fortunate enough to own other assets that are scarce, like paintings or jewelry, diamonds, all the types of things that have gone up in value much more quickly than overall economic growth and certainly than wage growth. So that asset price inflation is, I think, a significant aspect of the income inequality that we've been talking about, and this question of whether people have been left behind. But at the same time, the research innovation that we've seen in overall standard of living, in terms of transportation, in terms of access, in terms of entertainment, in terms of healthcare, in terms of life expectancy, as perhaps one of the most tangible measures, has also been extremely significant. So the question of, would anybody today choose to move backward in time to a point when perhaps there was more job security, where perhaps there was less income inequality, and certainly where there was less asset price and value inequality? Yes, that's correct. But at the same time, people have had such a very significant benefit that I do wonder, as a question, I think, to economists, how you think about that, and how you think about dealing with the real versus perceived inequality that we have to deal with.
So let me make a couple of comments. So I think it's actually a really interesting point you raise. And I think there's two aspects to it. One is perceived versus real. And the second aspect is inequality of what? And I think the inequality of what, I think, is a really important one. In some ways, if we have inequality in terms of assets, like, does that actually kind of really matter? People have got different, as you said, different asset values in their cars, or different asset values in their jewelry and so on. Is that actually the kind of inequality we care about? I suppose what I think of when I think about inequality is really, as you said, it's really about living standards. It's really about what's the level of kind of consumption that people are at. Are they able to get the kind of true underlying utility or happiness that they get from life, regardless of whether it's from income or assets and so on? So I think we focus far too much to start with on the kind of financial side of thinking about, is it income inequality or is it kind of wealth inequality? In some ways, none of that really matters. It's what it translates into in terms of people's actual kind of, what are they able to do in terms of their lives? I think your examples are really good ones. It's like, people's ability to watch a much greater range of TV programs. That increases people's living standards, but actually at very, very low cost. And I think we should be taking account of that. I think the other side of this is, in a way, inequality is only part of the issue. It's really poverty. And I think that there's a much bigger issue here, which is about the number of people who are unable to meet a certain minimum standard, or what we think of as being a minimum standard to get to in terms of society. So if we've got a huge amount of inequalities, George, the old Peter Manderson's quote about, we don't mind about how much inequality there is. That's you're completely comfortable with how much inequality there is, but as long as you're actually protecting people and keeping people out of a level of poverty. And I think that's where we conflate those debates. We conflate the debate about inequality with a debate about how to keep people out of poverty. And I think that's where looking at numbers like what's the fraction of income that the top 1% are earning strikes me as being completely uninteresting. What we should worry about is, what are the living standards in terms of consumption for the bottom 25%? What's their situation? And inequality could be anything around that. That's one issue. The other issue on the real versus perceived, I think that the real is what we should care about. It's real poverty. It's real issues about limited standard of living. The reason why the perceived matters is because it impacts through into politics. And you can see how if there's perceived inequality or there's perceived injustice, it changes the way people are voting. It changes the decisions they make about the sort of policies which are in place. And those policies can be put in place which are very detrimental to the very people that they're designed to help, even though those are done with this kind of perceived idea of ending inequality. So I think there's a real information issue here about trying to be really clear about what happens to people's living standards, what happens to poverty in different economies, and it would be. I think we should be moving the discussion away from worrying about people with £1 million houses and their high levels of income inequality, and worrying instead about what's the kind of real living standards they've got across the whole distribution rather than at the very top.
Yeah, there's also the question of inequality where. So particularly in the last 30, 40 years, the period over which in many countries, some of these measures that Hamish is not so fond of, but if you look at them, if you track them, they have shown rising inequality. And in many places, you do see it where median or sort of 30th percentile earning workers have essentially seen no real increase in a relatively long period of time, where others have seen a lot. Now, the inequality of where is the inequality matters, because a lot of that was driven by the fact that we were bringing other countries with huge populations, I'm thinking China, India, and other parts of emerging markets, much more into the sort of global economy. And so while it meant that if you happened to be a sort of relatively low income worker in the US, you didn't really see any real gains in your standard of living for a long period, 1 billion, 2 billion people were lifted out of poverty in sort of other parts of the globe. Now, the link with politics, of course, becomes important here, because what really matters to politicians is their constituents, and if their constituents are seeing, at least even a relative decrease in their standards of living. Some of it may be perceived, but the kind of they look to London and they think everybody in London is seeing a big gain, and they're not in where they live. Then that does, as Hamish was saying, that matters and feeds into politics and feeds into policies. But if you were taking a kind of overall view, it's not so obvious that you wouldn't look at the globe and go, actually, the last 30 or 40 years have been pretty good. And we've actually achieved quite a bit over that time, that, the time that the becoming much more maligned as bad policy time, but, lifting billions of people out of poverty in the globe, even if it's meant sort of relative stagnation in some advanced economies, it's a very difficult argument for a local politician to make and say that's the right trade-off. But it should be at least part of the debate that we should be able to have.
Thank you. Well, I'm hopeful that perhaps that's something, and that would be another sort of optimistic thing to say, would be if that were one of the outcomes from having come through the pandemic, that people can pause on that, and that as hopefully government puts in more resources, and as the economies open up and people then also have greater incomes and feel better about those incomes, that then also the terms of that debate change. And for me, at least, that is one of the things that I was hopeful was going to happen before the pandemic, with the full employment, with the wage increases that we've seen, that we would have not just then as increases in that standard of living and real increases in wages, but that would also lead to a gradual shift in people's thinking, and perhaps a reduction in their anger, and a reduction in the attraction of these populist policies that we've seen. But that, I think, is something that will remain to be seen.
Well, I think we should leave that on Chris's very optimistic note. I think that's, thank you very much, both of you, for that. That's been a very illuminating discussion. So thank you.
Thank you very much.
Thanks.